Just about 30 minutes to go until the closing bell. Still looking at gains. Jared Blikre has a closer look on what we're seeing. Hey, Jared.
Hey there. So let's take a look at the S&P 500. We did get some fireworks a little bit earlier. We saw a downturn that was concomitant with crypto, may or may not have been related. But here's a 3-month chart of the S&P 500. Just wanted to take a little bit of a step back here. It is election day, so I thought I'd throw out some stats here so we can see what tends to happen on these days. Now, first thing is the day after Election Day, that would be tomorrow, usually in the green. And here we have the last several attempts going from November 2018 all the way back to 1994. And we can see those midterm years, the day after, those tend to be green. And then when you take a look at the entire performance of the year, what we find is that stocks tend to go through a more serious correction during midterm years. This year it was 25.5%. The usual for the S&P 500 is 17.1%, but going forward, we tend to have gains here. That's Ryan Dietrich's work. He goes back all the way to 1950, and you can see the return 1 year later from the low in the year, very much in the green. And finally, one more unrelated study. This is from Almanac Trader. Going back to 1950, the best 6 months of the year has its best performance from November of the midterm year, that's right now, until April of the pre-election year. That would be next April, by a factor of 3. And none of the other years of the 4-year cycle had 0 losses. Here's that work. All in all, this could be a huge tailwind for markets were we not in this huge deflationary bear market right here. But with that grain of salt, anything is possible, guys.